It's time now for an in-depth look at the global markets this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, global strategist at Yuanta Securities. Mr. Yu, thank you as always for coming on.
Thank you for having me today.
Well, today the chief executive of Hong Kong, Carrie Lam, officially withdrew the bill that would have allowed for the extradition of criminals to mainland China. This was a key demand of the protesters. So Hong Kong stocks are up. Wall Street also saw gains overnight. How's it looking today there and elsewhere?
Yes, as you said, Hong Kong's chief executive lady, Carrie Lam, reiterated on Thursday that controversial bill that led to mass protest will be fully withdrawn with no debate and no voting. This is definitely positive news for the global equity market as equity risk appetite is coming back. If you look at the announcement, the formal withdrawal of extradition bill has sparked months of mass protests that have turned increasingly violent in the past, and that has caused Hong Kong market and most of the global equity market to suffer with that uncertainties. But as one of the 5 demands by protesters is getting rid of this bill, which will occur, and that is definitely positive news for the global equity market. And because of this, U.S. equity market rose sharply yesterday, somewhere between 1 to 1.3%. European market also rebounded by 0.9%. And China, after a sharp rise yesterday, it continues to rise today by around 1 percentage point. Also, Japan was up sharply, 2.2%. Kospi also seems to be rising second days in a row, where Kospi was up 0.8% and Kosdaq was up 0.56%, which is showing that Kospi is breaking above the tough level of 2,000 mark.
Well, meanwhile, we have the Federal Reserve releasing its Beige Book for last month, showing growth is moderate in the U.S. economy, similar to the month before. Tell us more about what's in that report.
Yes, the U.S. economy expanded at a modest pace from June to August, despite the looming concerns about the U.S.-China trade war. Almost all the Fed's 12 districts reported modest growth over the past few months. And the Fed said that its reason-by-reason roundup of anecdotal information, known as the Beige Book, the report prepared by the Federal Reserve Bank of St. Louis was based on information collected through the August 23rd. So clearly, these numbers are showing that trade concern is not really affecting that much for the time being. However, though, since the September, there's definitely additional tariff that's going through, which will cause the prices to go up for the consumers' consumption-related products. So therefore, that can be definitely negative news for the overall U.S. economic growth rate. So clearly still there's a concern between, so far the numbers seems to be fairly stable versus the additional tariff might cause U.S. economy to suffer quite sharply or quickly. Some of the manufacturing PMI numbers and some of the numbers that are coming through are showing that concern, while the labor numbers and the wage growth numbers seems to be fairly stable. So still there's a question mark whether how big this tariff increase is going to have impact on the U.S. economic growth rate. In my analysis, we think the impact can be quite significant unless the Fed lowers interest rate more aggressively. So we do anticipate that Fed will be lowering interest rate coming September 18th of this month.
Got it. Well, here in Korea, we've seen some remarkable numbers. Inflation at 0 last month, data show. That's causing concern we might be heading for deflation. But the government's planning an extra $2 billion roughly of extra spending in the second half of this year. What are they hoping will happen, and do you think it'll work?
Well, I've been saying that the Korean government needs to do a lot more than just coming out with this $2 billion injection of fiscal budget. If you look at the number, it's 2.6 trillion won, which is only 0.15% of GDP. And you already seen that the first quarter of GDP for Korea was the lowest level of 1.7%. And the second quarter, it was up, but it's only 2%, which is far below U.S. or China growth rates. We think that this kind of only 0.15% of the fiscal additional budget is not enough. If you look at the government debt as percentage of GDP, it is only 40%. We think that there's significantly more room to boost the economy. But current ruling party versus opposition party, the tension continues, and the fight between these two are continuing to happen. So really, the economic policies are not coming through as speedy as I would expect or I would want. And we think that not just the fiscal policy, but additional monetary policy is needed. Current interest rate, BOK, is 1.5%. We think that that number needs to go down to 1% or even below that. And with the GDP growth rate being only 2% or less, with the consumption inflation coming in at 0% for the previous month. So clearly, Korean government needs to do more than just this fiscal budget. We do hope that this will come through as the time passes. BOK action of the additional liquidity injection is likely to happen. So for the equity market of Korea, policies are moving in the right direction, but the speed and the size of the policy is not that satisfactory. So, which means that the momentum for the equity market can be fairly limited.
All right, Mr. Yu, got it. Thank you very much for your insights today. As always, we appreciate it.
Thank you very much.